If you're looking for signs of where the housing market is headed in 2021, you need to read the real estate tea leaves. Outside of detailed supply and demand numbers, there is no better source of current information than one can gather through a thorough examination of the pending home sales. Pending home sales are real estate listings with buyer contracts in place that are working towards closings. Today's report is a thorough examination of these contracts, and it concludes with a clear forecast of the coming months in the Tallahassee real estate market. Hi, I'm Joe Manausa, author of The Business of Getting Business and the creator of Manausa.com, where I've helped tens of thousands of people buy and sell homes, and I would like to help you too. If you already are a subscriber, thank you and welcome back. If you're not a subscriber, please consider becoming one now. We offer the most thorough and accurate housing market reports on YouTube, plus answers to your real estate frequently asked questions, and we also provide virtual tours of some of the most beautiful homes in Tallahassee. Simply hit subscribe to get started and the bell so that you're the most informed buyer or seller in your next real estate transaction. Today's report was assembled from data in the Tallahassee MLS on December 21st, 2020. On that date, I retrieved all sales that were closed from January 2019 through the first 3 weeks of December in 2020 and sorted them by contract date, not closing date. Additionally, I added all properties that are under contract and sorted the entire group by the date contracts were written. What this data represents is all contracts written that are still either working towards closings or ones that have already closed escrow, thus the agreements were confirmed. What this data omits is all contracts that were written and subsequently failed to close. Each month when I assemble a pending home sales report, failed contracts are removed so that we are only left with ones waiting to close or those that successfully closed. Because of this, there is a high likelihood that the most recent months account for contracts that will not close, while most distant months will have very few open contracts remaining, as all have either closed or failed to close by now. In other words, the past will pretty much remain the same, while the present will adjust as time moves forward. Our first graph plots each year's sales. The blue lines in the graph report the number of contracts written in 2019 by month that are either still pending or have already closed. The gray line reports the same for 2020. Currently, the number of contracts written through the first 3 weeks of December has grown to 233 more than those written all last year, a change of nearly 5% over last year's contracts, and we still have the final 10 days of December to go. Normally, this is where I warn you that a healthy percentage of these will not close, so the 30% growth of new contracts in November and 27% growth in December will decline significantly in the future as failed contracts fall out. But remember, we still have 10 days remaining in December, so yes, some contracts will fail, but we'll also have some new contracts written. This means that year over year, new contracts in November and December will very likely blow away the number written during the same 2 months of last year. This confirms that we are getting the unseasonably strong fourth quarter that we forecast when the market slowed in the second quarter, as buyers who opted out of the market back then are racing back to take advantage of historic low mortgage interest rates. Through all of our inventory reports over the past few years, I've pointed out that we need more homes. We need existing sellers to put homes on the market, but more importantly, we need builders to deliver additional homes to compensate for the lack of new construction over the past 6 years. This next graph segments all closed and pending contracts by new versus existing home sales in order to see the increase in builder activity that we're finally seeing in the market. The blue bars measure existing home contracts, both pending and closed, by the date the contracts were written, while the red measures the same for new construction homes. The red triangles report the percentage of contracts written each month that was new construction, while the red line shows the one-year trend of the new construction share of the market. Last year, a little over 9% of the contracts written were for new homes, and we've seen that grow to just over 11% in 2020. As of right now, 103 more new construction homes have gone under contract this year than versus the same time last year, something the market desperately needed and still needs significantly more. Using the same data, I calculated the average home price in 2020 each month and compared it with the same months in 2019. On average in 2020, buyers have been spending 10% more than they were in 2019. This is skewed a bit by a surge of high-end activity that occurred in September and October, but December prices were up by more than 9% over last December. We have to remember that this is an interest rate-fueled buying frenzy, and it will slow considerably when interest rates rise. The high end could go nearly dormant if interest rates rise substantially, and that would slow the average home price growth considerably. One thing to note, though, is that the MLS does not reveal the contract price for pending home sales. That means for homes that have closed, we're using the actual sales price, but for those still under contract, we're using the asking price. This means that when all homes tracked in this report close, it's likely we'll see the difference between the 2 years tighten up a little, as most close prices will likely be at or lower than most asking prices. This next graph tracks the average home value in 2020 each month and compares it with the same months in 2019. The graph shows that appreciation rate each month has ranged from as high as 16.2% to as low as 5%, with year-over-year value change in December reporting 14% higher than December of last year. Overall, the appreciation rate in 2020 is close to 9.5%, which is about 3 times the average we've seen over the last 30 years. With inventory remaining at historic lows, this could very well go much higher. As reported in numerous other market updates, we continue to see low inventory levels in most areas and price ranges below $500,000, and this is the biggest contributor to the accelerated appreciation rate. Now is a great time to sell a home, as buyers want to take advantage of historic low mortgage interest rates before they go away. This graph identifies when the current pending and closed contracts were written, with closed contracts shown in blue and pending contracts shown in red. We do this to evaluate the health of the pipeline. By pipeline, I mean the pending home sales and how they are distributed. Since the typical contract closes in 30 to 45 days, we have to be concerned with the number of contracts that appear in our report that are older than 45 days. Currently, about 1 in 6 contracts is older than 45 days. In fact, the oldest pending home sale goes back to November 2015, which is likely an MLS maintenance issue that needs to be removed. There are a handful of others that are more than a year old that are also likely bogus. Currently, there are 499 Tallahassee homes for sale in the MLS that are under contract with buyers, pending contracts. This represents a decline of more than 16% since our last pending home sales report revealed 598 homes under contract. This is the normal seasonal slowdown that we expect during the holidays, though the market remains far more active in December than we expect to see this time of year. Even though the market has entered the year-end slowdown period, the 335 contracts written thus far in December is much higher than we would see during a normal year. Remember, this graph shows closed and pending contracts by the date they were written, and there are 76 contracts that were written in December that have already closed, and another 259 waiting to close. This means that 335 contracts have been written in December, and we still have another 10 days to go before December concludes. Christmas and New Year's Eve will likely slow our pace for a few days, but December is poised to be much stronger than December of last year. It's important to understand what this means. Yes, demand has fallen about 16% from last month, but demand always falls in December. Demand is still very strong, and the limited inventory of homes for sale means the relative demand relative to the current supply of homes, has not changed from the scorching pace begun a few months ago. The year-over-year home sales graph has been set up in a different fashion than our previous graphs in this report. Note that this one shows all homes sold segmented by the date of closing, while the past graphs were assembled based upon the contract dates. I include this in the pending home sales report as a bridge to our other market reports that focus on closed home sales. 4 of the 5 past months have posted gains over the same months in 2019. Through the date of this report, the market is down just 1.3% for the year. That includes a partial December in 2020 and a full December in 2019. As I have stated in previous reports, I am confident that the number of homes sold and closed in 2020 will surpass the number sold in 2019. Our final graph shows annual home sales from 2002 through 2020, with this year's sales through December 21st. With 10 days remaining in the year, we need about 75 more sales to post a higher number than we did in 2019. The last day of the month is usually the strongest for closing. Compound that with the fact that buyers are trying to get closed in 2020 to take advantage of an extra year of homestead tax exemption, and I see no reason why we won't get at least 75 more closings in 2020. This would make 2020, pandemic and all, the 4th best year on record, trailing only 2004 through 2006 for the number of homes sold. While the COVID pandemic continues to impact our way of life, its impact on home sales has been neutralized by low mortgage interest rates. Reluctant home sellers need to take note. Current conditions are the best I've seen for getting top dollar for your home while also selling it on a predictable timeline. I am confident that the seller's market conditions will continue for the foreseeable future, but I do believe 2 market forces will eventually reduce the advantage that current sellers are enjoying. Number 1, mortgage interest rates are going to rise. Who knows when, but certainly they won't stay this low forever. When that happens, demand at the top of the market will erode significantly and decline throughout the lower price ranges. Number 2, sellers who are waiting for the pandemic to pass will eventually stream into the market. Again, I'm not concerned about the market flipping to a buyer's market below $400,000, but the supply and demand dynamic will be modified and sellers won't be as strong as are today's sellers. If you know you want to move, you should strongly consider doing so immediately while both of these forces are working to your advantage. Regardless of what you decide, we'll be here to keep you up to date on the listings and home sales in the Tallahassee real estate market. If you would like to see more videos about current housing market conditions, I've assembled a great playlist that you can view by clicking on the box on the top left corner of your screen. For a playlist of our top tips for home sellers, just click on the box below it. Please remember to like this video, check out the links below it, and subscribe to our channel so that you never miss anything.